Morning, Steve here in Chicago with the morning grain comments. Markets overnight are pretty quiet. We've got beans and wheat a little bit lower, corn a little bit higher. Market continues to wait for any news at all about the U.S. and China trade deal. On Friday, there was talk that things were getting closer. There's a couple other wire services reported that they've come to maybe some kind of consensus. The main thing is making sure that the write-up for the deal is understood by both sides, and then also down the road, how do you enforce things in which they don't necessarily do what they are agreeing to do. Technically speaking, soybeans went below the 50% retracement of the entire rally that we had over the last few months. Markets looking to see just what is the deal going to be and how the demand's going to be. Last week, the USDA basically increased world soybean in stocks. They also kept China's imports unchanged, but some people think that their imports actually will decline because of the African swine fever. And the USDA raised crush and lowered U.S. carryout slightly. But still, we're going to have to see how the market reacts to the fact that technically we are weak, and the funds continue to have a net short positions in beans and meal. Over the corn, again, USDA raised the carryout because of lower exports on Friday, kept world stocks about unchanged. But again, they dropped the China stocks a little bit, which really hasn't got a factor on the bottom line. Corn prices continue to drift lower. Funds added to positions, and now they're probably close to a record short in corn at 200,000 contracts. We'll see if that's an oversold situation or if we continue to drift lower until we find out if corn is included in any China deal. We're also watching the weather pretty closely over the weekend, especially in the east and delta. Rainfall was above normal. Wet conditions there could slow early planting of the 2019 U.S. corn crop. Wheat market continues to languish at contract lows, some people below value, but again, looking ahead at 2019, we expect world production to be up from last year and U.S. export demand maybe to fall lower. On Friday, USDA did lower U.S. wheat exports and raised the carryout, and they raised the world carryouts. All things were negative to wheat on Friday's USDA report. South American weather is good, and we're seeing that the harvest in Brazil continues to advance. And we're watching when Argentina starts getting into their harvest season and the impact it could have on the meal market. As far as outside markets are concerned, pretty much unchanged. People are watching the dollar real closely to see what happens if our economy slows here. We're also watching the stock market and the impact maybe a slower China and world economy might have. And then we're watching energy market and see if supply here in the United States continues to go up and demand globally goes down, offering some resistance to the marketplace. So again, our grain markets are getting a little bit oversold, but 2019 looks like a year in which supply could be up, demand could be down, which offers resistance to prices. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.